Brent crude oil has just had its worst losing streak for more than 2 years, but the trend is still up. So what do the next few weeks hold for this benchmark oil price? We've seen a lot of volatility in the oil market during August. It came into the month or ended last month around $75 a barrel, just below that. And you can see the big sell-off we've had from the middle of August that took it back near $64. That's the lowest price for Brent crude since April. So we traded back to, what is it, a 3-month plus low. But why it's interesting, for me anyway, this trend is still up. You know, we've seen a big sell-off from those 2.5-year highs around $77, but the trend is still up. So I do wonder, is there an opportunity in Brent in the days ahead, considering some of the volatility we're seeing? We do actually have a trade open at the moment. So it's from I think it's the last video we did on the 9th of August, buying 90 at 67.85 with a stop at 64. The market is currently about $3 in our favor. So I think we need to pay a bit of attention to that trade. It's up £177 at the moment. But I do wonder if there's another trade to do here. So as usual in this video, I'll talk a bit about what's been going on with oil, why we're seeing this sort of volatility. Then we'll come back onto the trading platform and see what the opportunity might be. Hello, I'm David Jones from Capital.com, and I thought we'd do an update on Brent crude because we have seen quite a bit of volatility. It's had its worst losing streak for a couple of years. It's turned around this week. So I thought, well, let's see what the next few weeks might hold for the oil price, given some of the moves that we're seeing at the moment. So as usual in this video, I'll go through some of the recent news that's been driving oil. We'll talk about the big levels to watch. I think there are lots of big support levels when it comes to planning trades. Then we'll jump back onto the charts, onto the trading platform, and see what the trading opportunity might be. If you're watching this and you haven't subscribed, if you could click on subscribe, it does help support the channel. It means we can continue to push out lots of different content on the markets that we cover throughout the week. Plus, of course, every Friday, usually at 2:30 UK time in the afternoon, I do a live stream direct from the YouTube channel where we take a look at oil and a whole host of other mainstream and not so mainstream markets. If you're subscribed with the alarm bell notification pushed, you get a notification off YouTube just as we're about to go live. Right, let's get into it. Take a look at Brent oil in a bit more detail. So it's only as recently as July, we saw a 2.5-year high for the price of Brent. We've seen this great recovery in the oil market since the April 2020 lows. So it hit its best levels for 2.5 years, but it has been struggling since then, since those multi-year highs hit in July. As of Friday last week, we'd seen the price drop for 7 days in a row. And this has been the longest losing streak for Brent crude since 2018. So it does put into perspective, I think, some of the negative sentiment we've had in this market. Of course, in July, we heard from OPEC and OPEC Plus that they planned to phase out the production cuts that have been in place throughout the pandemic, ramping up production from August. That's something that has been weighing on the oil price, but probably what's been spooking it a bit more recently has been the threat of the Delta variant of the coronavirus. So the market had been concerned about the spread of the coronavirus potentially in China, the world's second largest consumer of oil, and the knock-on effect that would have for the ongoing global economic recovery. So this had spooked the price. But we have seen, I think, something of a bounce back on feelings that perhaps the lockdowns that have taken place in China have helped to try and stop the spread of the Delta variant. But perhaps, more worrying again, this isn't going away, this issue. Just today, we've heard that in Japan, they've expanded the state of emergency due to the coronavirus, and it now covers more than half the nation. So the market is perhaps a bit more relaxed about the China situation, but news coming out of Japan still has the ability to unnerve the markets. So what does this mean for the price? We've seen a good rise over the last few days. Is it going to run out of steam and turn lower again? Let's talk about the big levels to watch. So for me, the immediate hurdle on the upside comes in around $71.65, the highs from mid-August. After that, I think an important low hit so far in August, short-term low anyway, hit last Friday where we've seen the price turn around from $64.35. So as usual, to put some color on these numbers, let's take a look at the charts in a bit more detail. I thought we'd start things off with a trend following indicator. So moving average. I've got a 20-day moving average here. So 20 days is roughly a trading month. And you can see clearly on the way up, we had the buy signal back in November off the moving average. So moving averages, we get a buy signal if the price crosses up above. And it did a really good job all the way up of holding the price until we saw a big sell-off middle of March of this year. Spent a bit of time below the moving average. Then it's moved above it. But what we're seeing at the moment, this is the longest we've seen Brent crude spend underneath the moving average. We've got to go back to at least September of last year. Although saying that, the bounce back over the last couple of days has flipped it back above the moving average, giving a buy signal. So that's our latest signal. The moving average has given a buy. Let's see how everything else ties up with that. If we take a look at the RSI down here, so the RSI went really oversold. It's the most oversold it has been. We've got to go all the way back to, again, September last year. So 11 months to see the RSI this oversold. Not surprising given the size of the sell-off. We've seen a strong bounce back since then, dragged the RSI back up above the 50% mark. I don't think the RSI is perhaps telling us too much at the moment. I think what would be interesting would be if the price sold off from here back down to perhaps, 66, that sort of area. If we see the RSI go oversold again, that could well be an opportunity. But let's take a step back and look at the price action. So we have this trend that's been going on, the part of the trend I'm looking at. This is from April of last year, those April lows. That was the low in November. And of course, we saw a massive rally higher into March off the November lows. And arguably, you could say the strength that we've seen over the last couple of days, this is the third touch of that trend line that's been in place now since those April lows. So we're 16 months into that. So I think if we were going to go with a bigger trend here, we'd expect the market to run back up to those previous highs. So those early July highs above $77. So 77, just shy of 77.50. I think if we were looking for a medium-term target on the upside for oil from here, or short to medium term, should I say. On the downside, I think it's really interesting, all the support we've got here. Look at these lows from April. $64 was the low in April. The market came back to it in May, $64.49. And then just last week, traded as low as $64.37. So 64, so far at least, is proving to be something of a line in the sand for the price of oil. So I'm quite tempted to do a trade here. We've got bigger support sitting out here, really big support down at 60. So for me, it's only if it turns lower, breaks 64, do we have to really start to worry that this trend is changing. And for me, then the target would be a run back to $60. So at the moment, I'm still quite happy to be a buyer of dips. Let's take a look at the shorter term. So here's our hourly chart on oil, picking up on the high at the end of July. And you can see that downtrend did a pretty good job, pushing it down into those lows at the end of last week. But the strength we've seen has broken that downtrend. Whether this leads to a bigger recovery remains to be seen. But the trade I would like to do, considering the market has moved, about $6. So almost a 10% move pretty much since that low at the end of last week. I'd like to be a buyer, but I want to buy a dip. So I don't necessarily want to buy in now where it is at $70.66. I accept I might miss any gains if I'm sitting there waiting for a dip, but I'm going to wait and see if we get something of a sell-off. So what I'd like to do, if I flip back to the daily chart, I'm going to put an order in to buy, and I'm going to put my stop loss the other side of this 64 support. So I'm going to go, to keep the maths easy for me, I'll go 63 for a stop on the price of oil, because if we start breaking below 64, perhaps this trend is in trouble. So I'll put a stop at 63, and I'll buy if we get a half decent dip in the price. So if the price dips back to 67.5, that's where I'm going to go. So if we see something of a pullback, a $3 pullback from where we are now, the trade will get filled. Let's set that up. So I'm ready to go. The price at the moment is $70.75. I am going to buy if the price drops to $67.50. So it's $3 away. But, clearly we've seen some volatile moves in oil over the last couple of weeks. So I don't think it's perhaps too optimistic. We'll see how it works out. If that order gets filled, put a stop loss in at $63. And that's for our usual risk that we place on these trades of around £250. You can see that $63 level on the chart below that recent support. So I'm banking on that support continuing to hold. Let's place the limit order. So the order's placed, buying 76 of Brent oil at $67.50 a barrel. Let's take a look at the existing position. So my existing trade, I bought 67.85 with a stop at $64. I'm going to move the stop to break even on this. I'm adding another trade in. Let me put a stop in at $68 on this. So lock in a tiny bit of profit and give the market a chance to move higher if it decides to rally away from here. So I've updated that existing position. So I put my stop loss in at 68, give it a chance to go a little bit further. If I take a look at my orders, so here's the order I just placed. There's an old Bitcoin order in there, but there's an order for Brent oil buying 76 if it gets to $67.50, and if that order gets filled, put a stop loss $4.50 away. Let's see how that turns out. But really interesting trading over the last couple of weeks for Brent oil. It is a sizable sell-off. It's one of the biggest sell-offs we've definitely seen this year, but it's interesting how 64 is holding. Let's see if it continues to hold and if the price can recover further from here. That's it for this update in Brent crude. Really interesting market to watch from here. Whether it can build on this recovery or is it something of a dead cat bounce before it turns lower, we'll come back to it in the weeks ahead. But for now, from me, David Jones and Capital.com, we'll leave things there. Good luck with your trading. For more trading videos just like this, please subscribe to our channel.